Jeff Gable, Head of Research at Absa Capital, is with us in the studio. Reserve Bank Governor Tito Mboweni today cut the repo rate by 100 basis points. That means prime overdraft rates will come down from 15% to 14%. And watching on SABC3 the performance of the governor, he was in pretty fine fettle. He said he picked up a bit of a bug in Davos, but apart from that, he seemed quite happy.
Yeah, I think so. I mean, happy, he was certainly very animated. The message that he gave wasn't a very happy one. 100 basis points off the interest rate is helpful to anyone who's borrowed. The reason for that cut isn't helpful to anyone. As much as they left their inflation projection largely unchanged, inflation falling from where we are now back to the target by the third quarter, and that's great news, the economy, the global economy, is in very terrible shape. The South African economy is also very, very weak, and that prompted the move from a 50 basis point cut in December to 100 basis points now.
We pulled out the key question, or the key sentence rather, from his discussion today. Let's play it, Sunshine.
I had hinted to them that maybe they should think about 200 basis points. And they thought that it might be the snow from Davos that had got into my head. And they convinced me that 100 basis points was better. But I went in there guns blazing to influence them for 200 basis points, but they will not be persuaded.
He seems to be more in touch with what's happening in the world than the other members of the MPC.
Well, there are different things, I suppose, but I imagine that anyone who spent time in Switzerland over the last week will come back feeling very downbeat. The notion that we've seen in the popular press here in South Africa, particularly around the turn of the year, that somehow 2009 was a reason for optimism, that the economy would do much better because inflation was lower, interest rates were lower, petrol was cheaper. It's very misplaced. The governor took pains to stress that South Africa is not an island. The world around us is doing very badly. It's shrinking very rapidly. And the simple notion that, say, South African exporters can continue to do well, your exports are someone else's imports, and there's not a lot of demand for that stuff right now. So while the governor shied away from being drawn on the question as to whether or not the economy was in recession, certainly it's our view. It's our view that the economy shrunk in the fourth quarter. It's our view that the economy continues to shrink in the current quarter, and the challenges for this year are very large indeed.
It is strange that there would be those who believe that 2009 is going to be a good year, because all the indications internationally is that it's like rabbits in headlights at the moment. They're just throwing money at whatever problem that they can. Other interesting part, though, from Tito was he said that when he visited, I'm sure you picked this up, the Reserve Bank governors from all around the world got together earlier on, and in Basel, I think he said, and at that meeting he came out feeling very depressed. Well, after Davos in the last week, he came out depressed squared.
No, I think that's it. And what's happening here is that as much as in the tail end of last year we knew that the world economy was in trouble, and as much as we expected all the growth rates to be minus, I don't think anyone expected it to be as negative as this. We think as a firm, we think in the fourth quarter, global GDP, not just GDP in the U.S. or the U.K. where we know that there's problems, include Russia, China, India, include all the countries, we think the global economy shrunk by about 4% on an annualized rate. That's the worst growth in more than 50 years. And that helps us understand, one, why policymakers, both monetary policy and fiscal policy, are really working hard to come up with some solution to try to moderate the chance of this getting significantly worse than where we are now. It also helps understand why asset prices are really struggling in a lot of countries. You get some days that are better for equity prices than others, but by and large, people are struggling to find those opportunities today that make sense, not 6 months from now, but continue to make sense a week from now. And of course, we see what's happened to commodities as well. As global growth falls, as the global economy shrinks in size, demand is falling significantly, and commodity prices move along with that.
Well, the big picture, and surely at Davos in the last week, it came across as a very glum and by far the gloomiest Davos that there ever has been. But if you take a person who's working in South Africa, who's got a salary, got a job, they're paying off their home loan every month, is it likely that we'll see more cuts in interest rates after this one?
Absolutely. I mean, the clear signal, not only from the governor's 200 basis point comments, but the clear signal on inflation, the clear signal for the development of our own economy is that this is not the last interest rate cut. We had 100 basis points today. In the middle of April, I would expect us to have another 100 then. From what I know now, I wouldn't be surprised we had another 100 basis points in June. After that, very much depends on where we are with regard to the global economy. Right now, every 2 or 3 months, we find ourselves revising down significantly our projections and therefore expecting interest rates to cut further. And the same thing would be true here in South Africa. So we're probably on the most pessimistic side when we believe that the South African economy is in a recession already. But I would say the risks to that are probably to the downside rather than to the upside.
Why don't you feel it, though? Why don't you feel it walking around the streets of South Africa? People are still smiling. People are still fairly upbeat. Businesses are suggesting that they can still expand.
Well, I'm not sure. When we look at the PMI is very weak. If you wander into an auto dealer, that auto dealer isn't going to be smiling right now. If you wander into an estate agent, they're not going to be smiling right now. The mines, by and large, not doing terribly well. Manufacturing, really struggling. Retailers showing that retail sales are falling right now. So I'm not sure where those smiles are. We know also, and the governor referred to it, in the private sector at least, there were job losses on a net basis in the third quarter, and more people lost their jobs in the fourth quarter. So I don't know whether we sort of sometimes sitting here in the middle of Gauteng, in the middle of Johannesburg, we're in sort of a little microcosm. But the overall story, the data that we get from Stats SA, shows that the economy is shrinking, that the pain isn't in one sector or in two sectors, but it's quite broad-based. And as the global economy continues to struggle, it's going to be very tricky to see us turn the corner first.
Jeff Gable, a bright shine of light, isn't he, David? It almost sounds like you in your Rage and Bull years.
Oh,
I got a theory on this.
Remember those?
I got a theory on this. I got a theory that the Americans and the British have never been through crises since the 1930s. Certainly not in living memory. We had 1985. Remember?
No, we've had
Debt standstill. We've had any number of crises in this part of the world. The Asians had the 98 crisis as well. So maybe we can just handle it a little bit better than they can. But I tell you, there, David, in Davos, it is just doom, gloom, long faces. The highlight of Davos, according to Bloomberg's, was the South African bar, because it was the only
I saw it featured,
No, the only place in the whole area where people did have smiles on their face.